This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So most of the videos that I do and a lot of the trades that I recommend and show examples of are trend trades. But I do think it's a good idea if you have the skill set to play counter trend. I want to show you how I would go about doing that. And a few of the things, I get some questions on targets in terms of counter trend plays. So I wanted to make sure I clarify a few things and how I look at it. So let's go ahead and get into this example. I've got a stock DuPont up, and I've got the monthly chart on the left, the weekly chart here in the middle, and a daily chart on the right. And what I've done is actually this is the zone, so it shows up on all three of these. Let me just circle this smaller point so you can see these are the same areas on this chart. All right, and what I'm looking at is a move that where we drop down here, we get a little stretched away. In fact, we do show some support after a spike low. We come down into the support zone, but more important to me is we're stretched away on this time frame. That's kind of first order of business is we're stretched from the 18 on the upper time frame. This is a 3 time frame trade. So we're stretched away on the upper time frame. That's your first order of business. So this would be like being stretched away from the 18 on the upside, right? So that's the upper time frame. Now, when we have that, we go to the next time frame down. And I've got a monthly here, so I'm going to go down to a weekly. On the weekly, on this decline, I want to show on this as this is moving stretched away, I want to see on this time frame if the momentum is slowing. All right. And so what I see is a move to the downside. Well, let's look at this move here. We have confirmation. MACD hits a new low, and then we rally up to the 18. We make another new low, but look at what happens. MACD does not confirm. Yes, the ADX is also making a lower high. The DI lines are also making lower peaks. But in this case, I'm kind of focused in on the MACD. I want to see a lower low in price and a higher low in the MACD, all right, at this point. So I'm here on this chart. Now let me do this again and circle this. And that is this point on the daily chart, all right? So we're extended from the monthly 18. I know the 40 is closer, okay, but I'm typically looking at the 18 as the center point in this type of trade, all right? Meaning stocks tend to trade around their center line, and for me, the center line is the 18. So we get stretched away from the 18 to the upside, to the downside, 18 up, 18 down. I'm looking at the 18 when I'm looking at this trade, not the 40. All right, now, so we get stretched away on the monthly, we get divergence on the weekly, and then I'm going to go to this time frame and look for a setup. Now, depending on how aggressive you want to be, let me just delete this so we can see this a little clearly. So depending on how aggressive you want to be, we know we're overdone here, and we've got divergence here. So what I'm going to do is I'm going to look for, so if you go to my book and you look at the 2 time frame pinch play, I give you examples at the end where you have divergence on 1 time frame and then you get a pinch play on the trigger time frame. That is a 2 time frame pinch. I classify that as a 2 time frame pinch, even though this is a divergence and this is where the pinch is showing up. Now let's just zero in on this time frame. In fact, I'll expand this for a second. Look at how this played out. I love how we got a move to the upside. We get the crossover, and then we pinch here, lower high, lower high, lower high, lower high, lower high. You see how many lower highs we did, and yet MACD stayed above? And then look at this dinky little narrow range bar. Oh, and then we gap down below these bars, and then move back to the upside. So anyone who's taken or is starting to look at my course, you'll see that this is a very important development, the way this is played out. By the way, I just released the swing trading course as a part of my trading school. And I do recommend starting with the trading, the trend and momentum course, the foundations course, and then going into this. But you will see that this pattern here is a very timely pattern, something you'd want to take advantage of and you can do with tight risk. So if we look at that in conjunction with the weekly, we know that we've got a trigger taking place. We know that we've got divergence on this time frame, and we know that we're stretched away on this time frame. Now, usually when I'm doing this trade, if I have divergence on the middle time frame, so I have divergence, I am not using the 18 as my target for this time frame. The trade is really the monthly working its way back to the 18-month line, but I will look at the price resistance on the weekly and say, okay, if I work, so I've got a divergence taking place here and I get a trigger on this time frame. If I get to the 18 and I feel like I've made a really good profit and I want to book a little bit of a gain, I mean, there's nothing wrong with doing that. I actually think this is the higher probability target area, is playing for a move. When you have divergence, play for a move back to the prior resistance zone. Now, if you want to go for the kill, you can still go for the 18 on this time frame because that's the ultimate target for a reversion trade. You look at that upper time frame and you're saying you're too far away, I got to work my way back down. Now, the reason why I like to use price resistance is because sometimes this line will keep dropping. If it takes a little longer, it'll keep dropping, and then you meet up at around the same price here. In this case, it happens so quickly that you would have ended up getting both targets. You would have gotten this one and you would have gotten the 18 MA. So it's something you could do on the fly. If this is dropping and it's meeting up with that prior resistance zone, then you know you have a really solid target on your hands. It's not necessarily something like, I don't know that I want to put the limit order right here. But if I'm going to play this with options, then I'm going to use this as my target area and not the moving average. Why? Because the moving average is dropping. It's changing it's going to keep dropping down over time. And I want to make sure that I have kind of a static target area. Now, if it turns out it happens very quickly, then yeah, you could go ahead and reach that target and could be a lot higher. I'd rather use a static number, but not the moving average in this case. If I get divergence here, I'm thinking price resistance and not just a move back to the moving average. Now, there's another thing that you can do in this instance to help. So let me just show you something I haven't talked about before. So if I have divergence taking place, I want to go back and look at how many swings do I have here? Well, I made, this is 1, 2, 3, right? I mean, I could really say 1, 2, 3, and this is my fourth. Once I get to the third or fourth, now I'm not just looking for a rally back to the 18, I'm looking for a potential reversal. All right, this is pretty important. If I get a divergence here, then I'm probably just playing for a quick move. But if I get a leg down, rally up, leg down, rally up, leg down, rally up, and I get that's a fourth leg to the downside. Well, come on now, guys. I've told you, look for 2 bear flags and then look for either a reversal or a more complex retracement. So if we get divergence after several legs to the downside, 2 to 3, if you've had 2 or 3 already and you get a divergence, then look for a bigger play, and that is, again, the rally back up to resistance or a rally back up to the 18-month line. So hopefully this helps in terms of determining how to frame out this counter trend play. I do believe you're going to want to learn this strategy. Again, I go into this in a lot of detail on the swing trading course, and that is having different equity lines based on different programs. I call these programs. This would be a different program than the trend trading program. Trend trading program can have a couple of different setups and a couple of different time frames, and each one of those are going to be different programs that are going to run in separate equity lines. So I think this can really help you be more consistent without being better at isolating most people think they have to have a higher win rate to get better, have a better equity line, but I don't necessarily believe that. You want to have a good idea of what you're looking for, and you want to have a good win rate, I guess. But the thing is that if you have different setups and different time frames working in your favor, your equity line is going to improve over time. And be more consistent over time, which is the most important thing. All right, go ahead and post any questions or comments, and we'll see you next time.